It is possible with a little patience and a few tips. Tom Johnson has more.
On the Fox 35 Money Watch, financial stability is about more than just savings and interest. Joe Bert from Certified Financial Group is here with part 2 of some simple tips to make sure your financial future is bright. Joe, always good to see you. Before we start, I want to go over last week's tips. One, review personal insurance, review business insurance, title assets to carry out your wishes, fully fund your retirement, and lock in rates on long-term debt. All great advice. Now let's start on the next one.
5 more.
Yes, all right. So start with thoroughly assess your investment risk. What do you mean by that?
Well, what a lot of people do is they look at, if they're investing in their IRA or their 401k, they look at what might be doing good at the moment, and they load up all their decisions or investments in that particular segment, only to be burned and then do it again. And one of the things you don't want to do is, if you have a 401k and your company has stock in the 401k, don't invest in your company stock in the 401k, or limit that to about 5% of whatever that allocation is. Because if the company's having trouble, your 401k is going to have trouble. Your chances are your 401k is going to go down. You may be out of a job at the same time. Bad thing to do is use company stock in your 401k.
All right, next tip, give while living rather than at death.
If you're charitably inclined, a lot of people say, I'm going to leave some money to my church, or my school, and my will. Give it while you're living. You get an income tax deduction today, and also can reduce your estate taxes if you're giving away large sums of money.
All right, educate your spouse and children about your finances. And this is one, I can't tell you how many horror stories I've heard about with this.
Well, this is critical. In fact, lately we've seen a lot of our clients coming in, older gentlemen with his wife, realizing that their time are limited, want to get the wife up to speed. And oftentimes it is the wife. It's sometimes the other way around. But most of the times it's the wife who doesn't really have a clue as to what's going on financially. And it's good to get the kids and the spouse involved, because ultimately they're going to have to make a decision.
Be liquid. What's that mean?
You want to have some emergency money. If you're going through another 2008, like when everything went bad real quick, you want to have some money set aside so you're not selling assets at the worst time. Try to have about 3 months living expenses in reserves, in cash, so you can get it when things go bad.
And that's a minimum, right?
As a minimum, yes.
Yeah. All right. And finally, live below your means. And this is a very common mistake people make.
This is critical. Unfortunately, what we see time and time again, Tom, is people get a raise. What do they do with the raise?
Spend it.
You got it.
Yeah, maybe got to get that big TV.
Go take the vacation, whatever. Take a portion of that raise, put it in your IRA, put it in your 401k. Try to live below your means. Pay yourself first, otherwise you won't have anything in retirement.
Why do you think people have so much problem with that?
I think it's Madison Avenue. I think it's keeping up with the Joneses. It's combination, peer pressure, all those things that we all deal with. 40, 50, 60 years ago, that wasn't a thing. Everybody was just trying to get along. Today, we're all hit with that day in and day out with commercials and what are my coworkers doing, what are my friends doing, and what my family's doing. I got to do the same thing, and you end up using the plastic, and it's a recipe for disaster.
Yeah, it starts you heading right downhill.
You got it, Tom.
Joe Bert, thanks. See you next time.